All right, welcome back. It is Tuesday, December the 14th. The averages are up, including the NASDAQ, but if you look under the hood, it is kind of ugly. NetFlix, Salesforce.com, F5, Cree, Vico Instruments, HighSoft, Akamai, they are getting whacked. Although Akamai is not getting whacked as much as Netflix, Salesforce.com, F5, Cree, HighSoft, Vico, and it looks like Rare Earth is also taking it on the chin today. Okay, so honestly, if we didn't have a position already in Netflix, we would actually probably strongly consider not having any position in it. But we're feeling a little frisky. Actually, we're feeling downright a little death wishy. So since we have a death wish, we double down on our short December 175, 170 put spreads in Netflix, and we did so for two reasons. We would never do something that crazy without telling you why. Okay, so here's the two reasons. First, Netflix gets added to the S&P 500 on options expiration this Friday, December 17th. This means ETFs, mutual funds, other investments that track the S&P 500 index will have to be buyers of this stock, and they're likely going to have to hold it for some duration in order to maintain the weighting of Netflix in the investment vehicle itself. So this should actually take some of the shares or the float off the market effectively. It's kind of like Lululemon. Jim Cramer talked about Lululemon and the fact that not all of the float was available to trade because mutual funds that held it just simply weren't going to let it go. And so it meant that there was actually less supply out there to meet the demand. Okay, the same thing should be true to some degree in terms of Netflix. As these closet indexers and mutual funds buy it to take care of its S&P 500 weighting, it should effectively take some supply off. So we like that. Okay, second thing, we have time on our side. Theta, right, that's the decay of the price of options for each day that passes as it gets closer to options expiration, is in our favor. There's only 3 days left as of now, and we're 124, which means we're halfway to Wednesday. When we wake up on Wednesday, there'll be only 2 days left. We like the time is on our side. So despite the fact that we're only $3.75 away from 175 where we're short, we feel like we have the time element on our side. Okay, the other thing is, when it comes to options expiration, I don't care what Netflix does on Monday. The stock can go to $150 for all I care, except for the fact that we do have some buy rights on, and if the stock trades down to 150, the stock that we hold long is going to be a little ugly. So we may look at collaring the position. I just have to take a look at it. But in terms of the short put spreads, if we can escape with our skin intact and our teeth, then we will probably not put on a position in Netflix until we see how it acts after options expiration. We love the story, love the company. In fact, bought the streaming service for the $7.99 a month. It's a great deal. Our kids have been watching Netflix basically since we bought the service for a week straight. So it's great, and we can you can watch on your iPhone, you can watch on your iPad, you can watch on any computer, and we happen to have Wi-Fi all over the place in the office and the house. So it's very easy to use. You can queue up a bunch of movies. You can pick from their recommendations, and it's intelligent. So the more you rate the service, the better off those things that they offer you as meeting your taste, the better it is at doing that. So we love the service, so there's a fundamental reason to own it. But obviously valuations are stretched, and obviously this kind of business doesn't have the hugest barrier to entry beyond just needing the contracts for the content. Margins will probably be squeezed, as there was a good article, I think it was in the New York Times, don't quote me on that, but there was a good article about how content providers thought that Netflix wasn't a threat, and so they offer them very low price content to begin with, just to increase their distribution, and now the cable providers are ready to storm the fort with pitchforks and torches because they're paying significantly more for the same content that Netflix is paying much less for. So don't look for those contracts to be renewed at the low levels that they were struck with in the beginning. Okay, all that being said, we only have to be right at 4 p.m. on Friday, which is like 3.5 days from now, and we like our odds. This is not for the faint of heart. Do not put this trade on if you are concerned. In fact, one of our followers on Twitter wrote in and said they sold the 170, 165 put spread in December. great. I think they took in 58 cents. That's a great trade. Again, there's only 3.5 days left. Time's on our side. Everything we said before. Okay? So, high soft. Okay? Somebody left a comment on our YouTube channel that the stock crashed. Well, yeah, it did. Okay, so two things. One, we identified this 27.52 level as that if the stock broke below 27, then your next level down, you didn't have another level of support until 24.5. Well, guess what? The stock right now is at $24.35. So you're there. Okay, so the trade was if it held there, you could be long at 27.5. If it broke 27, you had to exit the building. You can check out our video on Chartly. That's chart.ly. It's not .com. It's just Chartly, chart.ly. Okay, go check out the video. We did point out that gap that if it broke 27, the next line of support was until 24.5. Now that you're there, if you really want it, go ahead. Honestly, the best trade in HSFT might be no trade. There was another Chinese IPO today. They had the CEO on Squawk on the Street this morning with Aaron and Mark. They talked with them. They do the same thing that HighSoft does. So it may just be the fact that there's more supply in the market in terms of choices, right? And dollars have to be split between HighSoft and this new Chinese IPO that's in the same space. So in HighSoft, you're probably okay to initiate here. Certainly, with the stock's down from above $31 a share to 24, that's a massive decline. Even if just for a bounce, you may be able to play it here. Okay, but the bigger, more important thing to keep in mind is position size. Position size is absolutely critical. Okay, we just had a friend this morning told us that he had 5,000 shares of a stock. And we did the math, and it looks like he's got an exposure of about $151,000. So our reply to them was, if you don't have a $2.5 million portfolio, take down your exposure right now. Don't care how much the stock is up. Don't care why you bought the stock. Don't care what you think the stock is doing. Your position size is too big. Look, if you've got your position size should be somewhere between 2 to 4%. So if you bought HSFT where we told you at 27.52 because it held for a couple days and you're down, you know what? Cut your losses and move on. Okay? If you kept it to between 2 to 4% of your position, then you're okay. You can take a loss like that and move right on and just keep trucking. Okay? If you expect to trade in this stock market in particular without taking some periodic losses, move on. Go buy a bank CD. This market is not for you. Investing in stocks, especially over a shorter time frame, is not about always being right and not losing money. You're going to lose money over and over again. It's cutting your losses, keeping them small, and keeping your position size appropriate that will keep you alive and in the game in this market. If you have over 5% of your portfolio in one holding, you're asking for it. If you have over 10% of your portfolio in one holding, please send us your address so we can send you our condolences and some flowers. If you have more than 25% of your portfolio, tell us that day and time of the funeral and we'll show up and try to think of something nice to say to your friends and relatives. Okay? Please get your ego in check, get your position size in check, and do not bet the farm on anything. I don't care how good you think the stock is or what you think you found or what information you know that other people don't know. Don't care. Take down your position size. Keep it between 2 and 4%. And you know what? If it runs and you make 100%, job well done. Move on with life. Our compelling position, the risk reversal, where we were long calls and short a put against it, we were up 90% on the puts when we took them off, and we were up 135% on the calls. You know how many risk reversals we had on? 2. Okay? Because I didn't want to wager any more than that. We made a couple $1,000s. It was a really nice position. Thank you, Jim Cramer, for pointing that out on realmoney.com. There is no need to be a superhero. Okay? Superhero, Batman, Robin, X-Men, Green Lantern, they're all fantastic. But there's one thing they all have in common. They're not real people, and you're not a superhero either. So keep your attitude in check. Keep your ego in check, keep your position size in check, and you'll be A-okay in this market. Even if this Netflix trade goes against us, we're going to be okay because we didn't go out and bet the farm on Netflix or any other position for that matter. Okay? Just in case you were wondering, we did get just enough points to beat the number 3 team in our league, so we're into the playoffs for fantasy football. Thanks so much for tuning in today. Good luck out there, and we'll see you tomorrow.